Top 3 mistakes to avoid when trading options. Sounds like a pretty decent title for this video. And trading options is a good way to make money. But just like everything in trading, there's risks involved. So if you're new to options trading, there are a few mistakes that you're going to want to avoid if you want to be successful. So in this video, I'm going to talk about 3 of the most common mistakes that traders make and also how we can avoid them. One of the most common mistakes that a trader has is not having an exit strategy for their trades. So before you enter into any trade, you need to know when you're going to sell. Now, this probably seems like a no-brainer, but it's really something that a lot of traders don't do. They get caught up in the excitement of the trade, they forget to set an exit point. So as a result, they end up holding on to losing positions for far too long and taking unnecessary losses. Now, an exit strategy is important because it also helps you manage your risk. So by knowing when you're going to sell, you can prevent yourself from holding on to a losing position for too long. So you also need to have an exit strategy so you know when you take profits off the table when your trade is going on. So let's say, for example, you bought a call option, strike price of $50, stock price rises to 63. Well, if you don't have an exit strategy, you may be tempted to hold on to the position until that stock reaches $100. However, if that stock price then starts to go down, you could end up losing all of your profits. On the other hand, if you have an exit strategy in place, you can sell at 63, book your gains. The second way to get out, use market clues. So if you're trading calls or puts, we want to have a price target in mind, but price action will dictate when we exit. Now, when you trade calls and puts, time decay adds up the moment you enter that trade. So if we're in a position that starts to go sideways, we're not going to hold on very long just watching our profits disappear. Now, of course, any move against our position is generally an exit signal. We do not want to hold a position that has to make up lost ground towards the strike price. So let's consider a trade like a put credit spread. We want to look at keeping 50 to 75% of the premium that we collected to put the trade on, right? It's a credit spread. We get credit. So for example, if we collected 70 cents to open the trade, then we'll look to close a trade when we can buy it back for between 17 cents and 35 cents. Use physical stops. Now there's basically 2 main types of exit strategies: mental stops, physical stops. Mental stop, simply a price at which you're comfortable selling. So for example, let's say you bought a stock at $50, you place a mental stop at 40. So this means if the stock price falls to 40, you'll sell it regardless of whether you think it's going to fall or not. A physical stop that is placed in your broker platform. So this will automatically sell your position when the stock hits your specific price. So for our money, placing a physical stop is the safer option because this is going to allow your position to constantly be protected if price decides to go hard against you. Trading contracts with low open interest. This is another mistake that people make. Now, open interest, it's the number of contracts that are currently outstanding for a particular option. Now, one of the dangers of trading options with low open interest is that there may not be enough buyers to absorb all the contracts being sold. Now, this can lead to what is called a flash crash in the options market. And that's just when the price of an option suddenly drops due to a lack of buyers. So this can happen in any market, but it's especially dangerous in the options market because options are often leveraged, right? This means that a small price movement can have a huge impact on your account balance. So if you're holding an option with low open interest and there is a flash crash, you may lose yourself a lot of money very quickly. So another danger with low open interest is you could have difficulty exiting your position. So if there aren't many people trading the contract, it could be hard to find someone willing to buy it from you at a reasonable price. You may find yourself having to accept a lower price than you wanted just to get rid of that contract. This is going to eat into your profits or even turn your trade into a loss. So as a rule of thumb, consider trading 1 options contract per 25 contracts of open interest. So this way you are almost guaranteed, I said almost, to get your orders filled both in and getting out of the position. Therefore, it is best to avoid trading options with low open interest. There are plenty of other contracts out there with higher open interest. It's going to be easier to trade them. And sometimes just moving to a different expiration date or a different strike price, it's going to solve that issue. The biggest mistake here, next one, buying only calls and puts. And a lot of new traders, that's what they do. And they're very popular. Just buy a call, buy a put. But there's also ones such as vertical spreads that can be more profitable in certain situations. Now, if you're biased to one direction in a high momentum stock, Calls and puts work very well. They have unlimited profit potential. You can grow your trading account pretty quick. On the flip side, the losses can be massive because that underlying can drop to zero. When you buy calls and puts, time decay starts eating into your position the moment you set that trade up. You need a big move and you need it fast. So do not limit yourself to only buying calls and puts. You got to learn about all the different types of strategies you can use and use them to your advantage. Options trading, it's a great way to make money, okay? It really is. And it's very simple to avoid these common mistakes, right? Remember, always have an exit strategy. Trade contracts with high open interest and don't just settle with buying calls and puts. Try those 3, and I think you're going to like the results. And if you want to get started with options trading, you can download our free 8-minute options cookbook guide. Right? You can learn how to generate profit 5 different ways in only a few minutes a day. It's totally free. Link is above, link is below. Thanks for watching.